Welcome back, everyone. My name is Michael LeBlanc, Senior Portfolio Manager at Canaccord Genuity Wealth Management. Thanks for joining us here again this week at Mike on Money, where we talk about everything we saw last week and everything we see coming up in the next week. As you can see from the background and probably the sound quality, we're still in temporary digs as renovations continue on the office. So I do, again, apologize for that. And hopefully we're only a few weeks away from our getting back to our permanent spot. But with that, let's dive into things. As always, remember everything that we cover on here is for information purposes only. Always do your own due diligence or reach out to us at mikeonmoney.com. Happy to answer any of your questions specific to your situation or anything in general. If you have any curiosities or want to look into investment or financial planning in any way. With that, as always, we touch a bit on COVID-19 updates as it affects so many things, although as we've also been talking quite a bit, of course, about the Russia-Ukraine situation, which is affecting everything as well. But let's start with COVID. Obviously, the rules are lifting. BC, of course, the mask mandates have been lifted, or the mandatory mask mandates have been lifted. There's still a lot of people voluntarily wearing them. And April 8th in BC here, we'll be lifting the passport mandates, and that's the same with Ontario and Quebec. They both have set dates for lifting those things and mask mandates unwinded. So a bit of controversy around that, but it is moving forward. Obviously, all this in light of increasing COVID numbers in different areas. China is probably the one being most watched, with new shutdowns or new regulations going into place to stave off another surge in COVID-19, mostly the Omicron variant that's driving those numbers up there. But so far, Canada, Britain, US, haven't really reacted to that. And one thing that I've been reading is the Sinopharma, the vaccine used in China, or main vaccine used and promoted in China, is not as effective with Omicron as the ones used in North America and Europe. So some experts are kind of saying we don't need to take extra steps because our vaccines work better. Obviously, it's a watch and see kind of situation. Probably Europe will be the first kind of testing around, as they have been through all this for another surge. Let's keep our fingers crossed. Canada's also lifted their testing requirements to return to the country from international travel after April 1st. So they had gone from the PCR test down to the antigen test, and now no test required when returning into Canada. Do keep in mind, though, they are saying they're still doing random testing. So you might be selected for testing when you return to Canada at the airport. But as of right now, as of April 1st, you won't require a test to return to Canada. You still might need a test to get into the country you're traveling to. So, for example, the US still requires Canadians to do an antigen test prior to flying to the US or crossing the border to the US. So that's about it on COVID-19. Of course, we'll dive into the Russia-Ukraine as we talk more about the economy. So what's going on this week? Manpower US is, we're getting a look on the employment outlook survey for Q2, or for the upcoming second quarter, and the Canadian Industrial Product and Raw Material Price Index for February is coming out. Of course, we're expecting that one to be higher whenever you look at raw materials these days because of that Ukraine situation. We already had inflation putting a lot of pressure on things. And as we've talked about in the last couple of weeks, the Russia-Ukraine situation is only driving up anything raw materials kind of oriented, whether it be agriculture or metals, oil and gas, as both those countries are big suppliers to the world. The stock futures have opened up higher on Tuesdays as investors continue to watch developments in the Russian-Ukraine war, and really shook off the remarks from Jerome Powell, the U.S. Federal Reserve, kind of commenting about a more aggressive interest rates. And we'll cover kind of the U.S. interest rate hike last week and what their messaging was going forward. Markets are now faced with the prospect of a more aggressive policy around the inflation numbers. we've really layered a twist on. So when you're looking at the markets or your portfolios or whatever level you're looking at these days, keep in mind the underlying story is still inflation and interest rates. Yes, we do have this war and we do have this spike in inflation and we do have, more problems with the supply chain because of the war. But the underlying concern is still those two items. We have an added twist to the inflationary picture, but it is still the inflationary picture that we came out of 2021 with that we're looking at for 2022 and 2023. So keep that in mind. Take into account what's going on overseas, but those are shorter term impacts versus longer term impacts of inflation. And we continue to see day-to-day kind of market reaction to, whether people are optimistic about the Russian talks or optimistic about Ukraine's future, or if they become negative and concerned about what's happening over there. And of course, it changes day to day and hour by hour. As I mentioned, the Fed met or raised rates in the US last week. And really the messaging out of there is that they're going to have to take a more aggressive. So it was a 0.25% rate hike. The first hike we've seen since I think it was 2018. But they're looking at being more aggressive, maybe 0.5% of the next rate hike. So the market pretty much shrugged that off. And that's either the market already feels that 0.5 point is priced in, or the market is focusing solely on the war right now and not paying attention to what could be a more aggressive rate hike and a bit more volatility from that when that happens and plays out in the markets. We'll talk a bit about the yield curve today, and certainly the yield curve has kind of indicated that the market might react a little negatively if that 0.5% does happen. But it seems like the market seems to be really focused on the short-term happenings of the war overseas. Hedge funds go long the US dollar as that curve is steepening, before the Fed really starts raising the rates. But that actually has gone against them as the dollar actually weakened a little bit, despite those indications of higher interest rates. So that's kind of slipped a little bit. And again, is that because people got a little optimistic with Ukraine's, let's call it success so far in staving off the Russian advances. Of course, we saw yesterday and today with Russia stepping up their missile attacks on key Ukrainian cities. As we mentioned, Powell talked about raising the rates, more quickly than originally, or at least more quickly than some of the markets were kind of indicating early on in the year, and most of that's being driven. We got, if you've seen the fuel prices, and if you haven't yet started to see it at the grocery stores, it's starting to come in the food product, the food chain, where we're seeing higher and higher prices, not just because of inflation from last year, but because of the shortage that is only going to get a bit worse. Definitely if you're looking at European countries, we're going to see more inflation there. Coal, the retailer in the US, is looking at several offers for the department stores, and they're considering those as they kind of evaluate, alternative way of doing businesses. The brick and mortar, is that the way they want to go, or do they want to focus more on e-commerce or a completely different channel? Good that they're getting offers, although we haven't seen or heard kind of how those are valued and whether that's good for Coles or not yet. Credit Suisse was hit by another scandal as they saw, board shakeup with Severin Schwan, a very influential vice chair on the board, stepping down. If you've been following the Credit Suisse story for several years now, they've been hit with one kind of damage and scandal after another, kind of closing departments and downsizing and restructuring. And this is just kind of one more. So Credit Suisse continues to struggle with internal battles. Really nothing market driven. This is kind of an internal structural issue that they've continued to struggle with. Apollo Infrastructure Fund is buying a 49% stake in Spain's Prima Frio. So Apollo Global Management Investments, which primarily focuses on infrastructure, is buying a big stake in Spanish road and freight operator to expand out that infrastructure holdings as we're seeing continued spending, especially in Europe and around the world. Really, that's pretty normal in an inflationary market for governments to spend a lot of money on infrastructure, and we'll see more and more of that coming in the coming year. State Street SSGA is set to lose $14 billion of Hong Kong money. So basically the Hong Kong Monetary Authority, who had contracted out the management of one of their mandates to SSGA, has taken it back in-house as a cost-saving measure and feel that they've built up enough resources internally to run that. So it's a bit of a hit to SSGA as that money moves away from their AUM for their portfolios. So let's talk about what's coming up this week. As I mentioned, the U.S. Securities Exchange Commission is facing, some deadlines around Tesla. If you haven't been following this goes back a couple of years. Elon Musk, when he tweeted out about taking Tesla private, which is really not, kind of, if that were true, and maybe it was something he was considering, it's insider information. So tweeting that out, which affected the stock price. There was a big SEC case against them, and one of the things that they came out with was monetary. I think it was $20 million penalty or fine to him, but also required that his tweets be vetted in advance by lawyers of the Tesla company. So Musk is challenging that it restricts or violates his free speech rights. So we'll take a look and see what that means. I don't know if it's good for Tesla if he's free to tweet at whatever he wants, given it was about a week ago he challenged Putin to a battle or a fight to determine the fate of Ukraine. Is that the guy you want at on the social media channel for your company? So we'll see what happens there this week. They're expected to rule on that. The the Federal Reserve Bank of New York president is participating in a virtual conference. So, just after the US Fed comes out with kind of their messaging and being more aggressive, the states obviously are holding their annual 2022 summit with international banks and talk about what their trajectory or tracking their recovery and trying to avoid that recession, right? We talked about the recession last week more and more. The probability statistics are increasing more and more. We may go into a very short-term recession in the second quarter, just driven by the spike in inflation that we're seeing out there. I guess on the good news front, Carnival is expected to post a rise in first quarter earnings, helped by the rebound in demand for cruises, which is great. Certainly not getting me out on one anytime soon. I'm not sure how you guys out there feel. But investors are on a lookout on these earnings, because obviously we had the Omicron impact of its resurgence, Russia's invasion of Ukraine. A lot of those ports, will be out of service to the cruise lines, or certainly a lot of them be much more of a concern for the cruise lines to access. And then on top of that, you've got the higher fuel prices impacted the entire travel industry, whether you're flying or cruise or even driving. So we'll take a good look at that. It'll be an indicator to kind of see how that sector is recovering. They can't seem to really catch a break, as soon as people start to travel and post or book cruises again, they get hit by other issues. It's obviously fuel prices being a big one, a big impact for them. The US SEC proposes companies disclose a range of climate risks. So this goes into the Biden's government kind of push to join global efforts to avert, climate-related catastrophes. So they're looking at a range of climate-related risk and greenhouse emission numbers for each company that's listed on the U.S. exchanges to allow investors to decide, how much they want to support or impact with their investments into those companies. We're also seeing a lot of that in the social governments investing or the environmentally responsible investing side of things. A lot of those vetting systems need data in order to be able to tell which companies are doing better than others when it comes to climate change. And so having these transparent numbers out there will help those interested in investing more socially responsible. Buffett went out and bought an insurance company after a drought. He had actually just been complaining for a few weeks that he wasn't able to find any good deals or investment opportunities, and he found an insurance company that he's buying for 11.6 billion. So good for him. Not that I think too many people were overly concerned about Warren Buffett not being able to find something to buy, but obviously he's looking at the interest rate hikes, which, as we've talked about before, increases spreads for banks' profitability, but also helps insurance companies. So getting in on a good value. Probably a little early stage on the insurance side of things, but that's his how he generally invests, is fairly early stage. Russia has found Meta, so the parent company of Facebook, Meta guilty of extremist activities. But WhatsApp, they're fine with. So if you're not aware, WhatsApp is the texting app within Facebook, or Facebook bought it. So it's a separate app as well, as operates the backbone to the Facebook Messenger. So they said WhatsApp is fine. The messenger service can continue to operate within Russia, but they found them guilty of extremist activities. But they'd already banned Facebook and Instagram social networks as part of this war and the different shutdowns that U.S. put on Russia, and individual companies have put on Russia, and Russia is just hitting back on those things. Boeing stock fell briefly. It has bounced back. So if you haven't followed the story, there was a horrible crash of a 737 plane in southern China. All 132 people on board are believed to not have survived. This is the 737-800 aircraft, not the MAX 8 that previously had issues. This 737 model has been in operation for longer than the MAX 8, although they share some characteristics. So far, the thoughts are this is not a design issue, that the same as the MAX 8. There has been one other crash, I believe, on the 737-800 in recent years. But China Eastern Airlines has grounded their fleet of 737 while an investigation takes place. So the Boeing stock took a big hit, but did bounce back fairly quickly. People looking at, as a value buy. Also, Boeing is kind of caught up in this aerospace and defense surge, as we're seeing more and more countries beef up their defense, whether it be planes or military defense systems. Boeing obviously is a supplier to some of those. So we saw a pretty quick rebound yesterday and today on those stock prices. So far, not a lasting impact on Boeing, but of course, we'll keep an eye on the investigation to see what happens there. Google has settled a lawsuit or a claim over firing workers protesting kind of an immigration cloud deal that they put in place. So Google, or the parent company Alphabet, is pretty famous for this, for starting up different efforts. You probably remember the most famous one, Google Glasses, right, was going to come out and change the world. Got to put a bunch of money, put a bunch of employees and people behind it. And then as they looked at the market, decided it wasn't worth their while, so they shut it down. So this was another kind of a cloud structure that they were they moved employees, here's an opportunity, so give up your current job, move into this division, and get this trial things working. They paused it for several months and then shut it down. So the workers kind of went back and said, hey, you really didn't give us an opportunity to really make this a real thing, and we lost our jobs as part of it. So they settled. We don't know what the settlement was, but they settled that in court, and the case moved on. So not a big hit to Google, and certainly the price share hasn't moved at all, or has gone up as opposed to going down. On the dollar front, the U.S. dollar actually gained a little bit after a few days of weakening, again due to optimism around the Russia-Ukraine situation. But Jerome Powell, as I mentioned, talked about higher inflationary rates, so it should be driving the U.S. dollar up a bit stronger. Again, it's the flight to safety and concerns. So depending on, again, taking the war out of the discussion, just looking at the inflationary impacts, not just here, but in Europe, especially when you talk about the impact of the resources and energy cut off from Russia into Europe, they're going to see probably a higher spike of inflation over there. So the flight to US dollar or the safety of the US dollar will continue. So we'll likely see the US dollar continue to gain ground from that front. And that's really where we've seen some weakness in the Canadian dollar, is really losing against the US. The yen has weakened further, again, just against the US dollar. Basically, kind of a divergent monetary policy as the US, the yen or Japan looks at, continuing to maintain lower interest rates, and the US is increasing their prime rates over this year. And we saw the 10-year note kind of pop up a little bit over 2%, 2.35 Tuesday. So well over, if you remember last year, we were tracking, that 1.8% number. If we broke through that, we were looking in for interest rate hikes. We've also obviously gone through that, even after the quarter point we saw increase last week. So just more fuel for that 0.5% hike coming up in the next month or two. On the commodity front, oil prices we're a bit lower in Europe. So this is coming off the high where they broke through over 100, and I think they hit around 137 a barrel. They did break down to the low 90s. It is back around the 110, 111, I think last time I looked, a barrel price. So still holding in really strong. Again, when it comes to energy, if we take the war out, the trajectory was upwards. It's going to could continue upwards, especially as more and more travel opens up. We still have some supply constraints. We do have the twist, obviously, of Russia's supply being taken off the market as countries around the world pivot to find other sources for their oil, and that has been happening. We see Germany strike a deal with Qatar. US is obviously working a lot more with Canada, but also looking at lifting sanctions on Venezuela to get some from there. So short term, yes, we saw that Russian spike. Longer term, it is still just a supply crunch as we reopen the economy and people get back to traveling and having shut down a lot of the supply during the pandemic. So the messaging is still strong energy pricing for the next little while, and we just layering on the Russian issue on top of that as we go through that. So with that, that's what we have for this week. But if you have any questions at all, any comments, go to mikeonmoney.com. Love to hear from you. Remember, these weeklies are put on our podcast and YouTube if you want to listen to them or catch up on them outside of our live hour. Feel free to do that if you can get those links right at our site there. And hope you have a great week. Looking forward to talking to you all again next Tuesday. Take care and thanks, everyone. Bye-bye.